All right. What's good, everybody? Welcome back to another webinar. Hopefully, everyone had a great Thanksgiving, spent it with their family and friends. Obviously, hopefully you guys had a great weekend. I don't know if you guys saw the free Telegram. For those of you guys that are in the free Telegram, but I am personally going to be done trading for the rest of the year as volume tends to start dying down. That doesn't mean I'm going to stop doing webinars. Doesn't mean I'm going to stop doing chart breakdowns for you guys, but I'm personally not going to be entering any more positions as we're literally entering December this week. And I personally haven't traded December. I didn't trade December last year. I don't intend to trade December this year. I really want to enjoy the holidays. And then come January, we'll kill the rest of the 11 months. That's obviously not December. So giving you guys a breakdown on obviously my watch list, as you guys know, which is something that we constantly always do. We're going to start off with GJ. So since it is a new week, I want to start off on the weekly time frame. So last week, GJ actually ended up making new highs and closing back above our resistance area being 168. But so far this week, what we've seen so far is price actually already make new lows compared to the last week, which could be an indication that we may actually see price go down. Ultimately, really what I'm looking at here is just really how these candlesticks are forming. As of right now, our current weekly candlestick is forming a bearish engulfing, and we did just break under last week's lows. So we could possibly see price make new lows. If we look at the daily time frame, what we have here essentially some consolidation. Here's a consolidation range where price is just broken out of that consolidation range, and we're now trading back above this area of resistance, which again, we could definitely wait for price to pull back up into this area. We also close under the 21 SMA. We could definitely wait for price to pull back up into this area where we could then look to sell it from 167 all the way back down into 165. Just kind of going off the daily time frame. Not just that, we have a lot of momentum, or had a lot of momentum in the previous daily candlestick. It is a very big candlestick as well. So if we go down to a 4-hour time frame, we can even see the market structure shift here as well, where essentially price is making higher lows and highs. And then we have an obvious break of structure here, a retest, a rejection, and price going down to make new lows. If we go down to a lower time frame, such as the hour time frame, we could definitely see this market structure a lot more cleaner, because again, the lower time frames will be able to read more data and probably make better decisions on as to what the market could potentially do. So we have the break of support around here at 167.300. Let's call it. We had the retest and the rejection and price moved away. We have price forming lower lows and lower highs on this intraday time frame. So I would continue for price to look to maintain this bearish structure. At this point in time, when it comes to GJ, it's only 10 o'clock at night, so I definitely wouldn't be comfortable looking for a position in this range here. I would definitely want to see some form of a steeper pullback into 166.980, 167, where we could then look to sell it at this area and then look for price to come back down into 165.400, which is our next major area of support, where we could have potentially, or where we did take trades a couple of weeks ago, I'd like to say in the beginning or the end of October and the beginning of November as well. We were taking positions off this area here. So I would continue to look for GJ to go down into this 165.400 range. I would just wait for a little bit of a steeper pullback back into 167. Let's kind of call it. Now with gold actually this double bottom did actually play out very nice. There was clearly a liquidity grab here, so it may have been a little bit more difficult to actually catch the position. But for those of you guys that were in the last webinar or saw the last webinar, basically what I was saying is if gold can actually form this double bottom, then we could look to take it up into this 1760 range. Obviously, if price breaks above 1760, we could look into 1784, which price tried to break above 1760 here, tried breaking above 1760 here, but ultimately price is starting to go bearish. Let's go up to the weekly time frame. Overall, the weekly time frame a few weeks ago, this week was a very strong and bullish week. So we could have definitely expected some form of a pullback where we could then look for a continued move up. But again, I don't like to really make big decisions like that based off the weekly time frame. I'll always like to follow the daily time frame and just kind of maintain myself on the daily. But definitely looking at last week, this is really realistically just in a decision candle. We have resistance at 1760 and we have support down here, and all this weekly candlestick tells us really was that price rejected support, price rejected resistance. There's no like real clear directional indicator that, you know, we could go up, we can continue to go down. This is when we go to the daily time frame. And on the daily time frame, essentially what we have here is a break above support or a break above resistance, a break back under resistance, and now price is continuing to hold this previous resistance level. So at this point in time, we can actually expect price to continue to go down and test this area of support yet again. Let's go down to a lower time frame. So the 4-hour time frame, essentially price made a high here and we had a low where price just broke under the low. So at this point in time, we can kind of continue to expect price to trade lower. I would expect price, or I would look for price to come back down into this zone where we did see this double bottom actually play out. And then I would look for buys inside of this zone here, back up into 1760 again. Now, obviously, if price breaks under that area, then we could see definitely a way bigger drop back down into the 1700 range, which looking at it from an impulse from this point to this point is about 50% pullback in this overall like bullish trend that we're starting to see here on gold. So at this point in time, I really wouldn't look for anything all too much other than just kind of maybe a continuation to the sell side. If you guys are looking to sell gold, I would just be very cautious, but this definitely could be an area where you could look to short gold back down to 1760. If price breaks above this range, then it could go back into 1760, my bad, not 1760. Look for shorts down into the 1735 range, let's call it. But if price does break above this area, then you could easily see it go up into this area, which if gold goes up into 1760 again, I would be very cautious on selling it here. I would probably rather wait for a break and a retest of this area. Looking at the hour time frame, though, there's a lot of bearish momentum. So we could possibly see a pullback and then it continue to move down into this area where essentially, you know, if you caught shorts, then this would have been your targeted area. Or you could possibly just wait for gold to kind of give you a better directional bias in terms of, okay, let's wait for gold to come into 1760 where we can either look for sells or break and retest on buys, or wait for price to just come into support where we could look for potential buys. And if price breaks support, we'll wait for the retest and look to sell it back down. That's what I would wait for on gold. Now, the NASDAQ on the weekly time frame is still kind of in an overall bearish condition. Really didn't get too much information here off of the last week, other than we're still trading under this major resistance zone at 12,000. Price ended up just making a simple low. Overall, we're consolidating around this 11,500 and this 12,000 range. If we go down to a lower time frame, such as the daily time frame, we can just kind of see this consolidation level a little bit more. Obviously, if price breaks under this support level, then we can continue to look for sells on the NASDAQ. That's kind of obvious. If price maintains above this support range, then we can continue to look for buys all the way up into 12,000. That's definitely how I would set myself up in a position. Realistically, though, I probably wouldn't look to sell the NASDAQ unless it could break under this 4-hour support range. If it could break under that 4-hour support range, then we could basically expect it to continue to make new lows. But at the same time, you know, you can also wait for it to break this daily zone, but I would definitely want to wait and see what happens if price were to reach this area here. If it breaks down and makes new lows, and just simply wait for the retest and look to go short. On the buy side, I would be a little bit more conservative. I would like to, in a situation like this, probably wait for some form of a double bottom on a more concrete time frame, such as maybe like a 30-minute time frame, because I mean, it's 10 o'clock at night, price is starting to go bullish. So by the time the market opens up, you know, we could wait for a double bottom and then look to buy. But I would actually be looking to take potential shorts off of a break and retest of this 11,520 level, just because the way the weekly's forming, I would continue to expect price to go down. But again, I don't really like to play like a guessing game. I would like for price to show me what price is going to do, not for me to just try and guess what price is going to do. This is why I say, you know, if price does this, then I'll wait for this. Or if price does that, then I'll wait for this. I like to give myself different points, different perspective and points of view as to what price could do. Again, in this situation here, you know, if we break this 11,500 range, we'll definitely go down where I'll wait for a retest and then look to short it. If price gives us a double bottom, then we could potentially look to take price long. Just very, very simple. Let me delete that. Hold on, give me 1 second. Now, S&P 500. Let's go to the weekly. So on the weekly time frame, so far, the week literally just started and we've seen price already completely almost engulf the previous week's bullish move. Going down to a daily time frame, we do have this double top pattern here, which I personally don't really like trading the actual pattern itself anymore. I'd rather just wait for more confirmation. But definitely, the area of support to look out for would be around this range here. So if on the daily time frame you see price breaking under this support level, we could definitely come back down into this 39.11 area, going down to lower time frames such as the 4-hour time frame. Right, we have support in this range here, and then we have resistance all the way up here. Notice how price ended up closing under resistance, and then we had 2 retests and rejections of this area. So these are 2 areas that I would be looking out for on the S&P 500, being this support range here, or this red line, and this orange line up here being 4,000. These are the 2 areas at this point in time where I would look to take positions. I would like to be a little bit more conservative, especially around the holiday period when there's just not as much volume in the market. So in a situation like this, I would like to see a pullback into this 4,000 range where I could then possibly look to short it back down into this intraday hour support level, or wait for price to kind of break under this area and then retest and then look for price to go short and continue the shorts. Now, if price were to break above 4,000, the obvious next area would be 4,032, kind of giving it an intraday perspective. And that's really all I would look for on the S&P 500. Again, nothing too complicated. Either wait for price to come to resistance to sell, wait for a break and retest of the support range to actually sell it down into the next support range. Definitely on the daily time frame, though, if price does break under this area, then we can expect it to come back down into this area here, especially if it closes under. Then I would like to see what price does around this area, because if price breaks under this area too, then we could definitely continue to trade lower. But again, that's so far out of the picture. So much has to happen before price does any of that. I will just continue to look to sell with this bearish momentum that we've seen here over the last, few days? Over the last 2 days, call it. Nothing too complicated again. Now, on the weekly time frame on US 30, we've actually closed above this weekly highest close that we've seen here, but failed to actually kind of close above and break above the highest point that we saw here, which is a little bit interesting. Now, going down to the daily time frame, this is where I would be a little bit cautious. We have previous daily resistance where price just closed above. We could definitely see this previous resistance hold as support. And then the way I would be looking at this would be from a 4-hour and an hour perspective. Obviously, if the hour time frame continues to make new lows and price starts to break under this weekly resistance range, then we can, or support range, then we can expect price to continue to go lower. Also, one thing to keep in mind is that on the intraday time frame, on your hour time frame, we have resistance all throughout this range here. So what I would wait for is for price to pull back into this area and see what price does. If price starts to reject this area up here, then we could definitely expect it to come back down into our weekly support or resistance range, however you want to look at it. So this could be a pretty good trading opportunity, obviously, to take a short position from this area to this area down here. Obviously, if price breaks above this hour resistance range, we could easily expect it to come back up into 34,100, which is our next area of resistance. Or if you really want to play it safe, you could just wait for either a break of either this area here or this area here, wait for the retest and go either long or short. Now, that's going to end the breakdown for me. Do any of you guys have any questions?
What do you think about GU?
Said GU?
Yeah. Because I'm looking for longs, but I'm waiting for like the daily to cool, relax a little bit because of that bearish momentum we just had.
What do you mean by relax?
Not slow down. That's what I meant. Because of that bearish momentum we had.
Slow down to the short side?
Not for longs.
Aren't you looking to buy though?
Yeah, I'm looking to buy.
So why would you want it to slow down if you're looking to buy? Wouldn't you want that momentum to essentially keep up? Because volume and momentum in your favor is what's going to make you money at the end of the day. I'd actually be very concerned if this bullish momentum were to continue to slow down for me to take buys. Same thing on the bearish side of things. I would like to see my momentum continue. So once you see that momentum start slowing down, then you can kind of expect it to go in the opposite direction.
Oh yeah, I got what you're saying.
Hey Raul,
Yeah.
what's your bias on Nasdaq? I just joined now.
I don't really have a bias as of right now. But definitely if price maintains above this support range, we could look to buy. The minute price breaks under, we could look to sell it. But anything above like this 11,500 would definitely buys, and then anything under 12,000, around the 12,000 range would definitely be sells.
Thank you.
Hey, bro, can you do gold again? My bad. I just got in.
Basically, I would wait for price to come down to 1730 to look to buy, or break and retest above 1760 to look to buy. If you want to be risky, you could definitely sell it, but that's what I would wait for.
Hey Raul, I wasn't here for the GJ review. Could you please go over that for me, please?
I would wait for a pullback into 167 to look to sell it down into 165, 400.
I appreciate it.
Yeah.
Hey Raul,
Yeah.
you said before when analyzing the S&P 500 that you don't like trading double tops anymore, and you said you were looking for more confirmation. What type of confirmation do you mean? Like another rejection?
I mean, essentially, like you could find double tops, double bottoms on so many different time frames, right? What I really like trading more than that specific pattern would be kind of almost like a breakout, but I would much rather take a break and retest off of that area, off of a more major area than kind of just taking a double top or a double bottom pattern. I mean, sometimes I'll take the positions, but it's not like, oh, double top, immediate, I'm going to take a sell. It's not like that anymore for me, at least.
Okay. Thank you.
Yeah. I mean, you could look at what happened over here on gold a few days ago, where you had a pretty crystal clean double bottom, and then you saw price continue to go down. And this is definitely a candlestick that would have taken a lot of people out of the market before we saw it continue to go up, you know?
Sure. I have another question.
Yeah.
I know that patterns don't have to be perfect, but how far apart can a double top be? Is there a point where it would be considered just two rejections?
I mean, we could look at this as a double top, you know? Some people may even look at something like that as a double bottom. Ultimately, it's up to you how you want to interpret it. For me personally, you know, if I were to see price come all the way back up into this range and I go to a weekly, I'm not going to be like, oh, yeah, you know, it's a double top. I would say, okay, I wouldn't see it that way. I would say, okay, let's wait and see if we reject this price range where I could look to sell it. I would kind of like it to be around the same, you know, date and time, though, especially on a 4-hour or daily time frame. I wouldn't like for them to be months apart.
Right.
But it's really up to you and your own perspective, you know?
Okay. Thank you.
Yeah.
Can we take a look at NZD USD real quick? Just like what you're thinking.
Okay. I mean, we have this support range down here that price is obviously broken above, came down, retested, continued to go up and make new highs. Now we have kind of like a resistance range over here where price is already holding as support. So that's on a daily time frame. Go down to an hour time frame. We have our previous market structure resistance here. Price broke under, but it just broke back above. So in a situation like this, I would probably like to see a pullback into this range here where you could possibly look to buy if it continues to actually hold as resistance, or you could possibly wait, or as support, or you could possibly wait for price to kind of come back down to this area here and see what happens. Again, I would like to try and get into a position as close to my support or resistance range as much as I possibly can, just so I can have the best risk to reward potential possible. Because obviously you're not going to look to take a buy in the middle of this move because the move is already happening. Right? If you were to look to take a buy here, realistically, like the best targets that you could possibly do would be these highs over here in that risk to reward ratio just simply wouldn't make any sense, because for this trade to be invalid, it would have to come and break these lows down here. So in a situation like this, I would much rather wait for a pullback and then look to take a position from maybe here to here, trading it from like an hour time frame.
Gotcha. So you think that 1 hour trend is most likely be turned to an uptrend?
I mean, price has been uptrending. Like, this minor pullback doesn't mean that hour bullish trend is like a new trend. Price has been trending bullish. And our structure point here for this position for our last low would be down here. So for price to go into a bearish trend, it would have to break under these lows and make new lows, right? So in a situation like this on NZD USD, which by the way, I've never traded before, this is kind of like the area that we could look for price to continue to pull back down all the way to, for that bullish trend to continue to be valid for me to want to continue to buy NZD USD. Now, depending on what type of trader you are, you could take advantage on lower time frames of this counter trend, right? But just keep in mind, like, this is like an overall zone that we could look for price to just kind of play around, consolidate before continuing to go up. That will still be valid in a bullish trend. Anything under these lows, I would be too concerned to actually look to buy, because now the structure has shifted. We've no longer gone from making higher highs and higher lows. We've now started with a new lower low. So after price makes your first lower low, you would anticipate a lower high and then look to sell it and obviously capitalize off of a new low.
Gotcha. Thank you.
Yep. Anybody have any other questions?
Yep, Raul.
Yeah.
Yo, how to eliminate fear from your trading?
Bro, I mean, it's a normal emotion. You're always going to go through it. That's like you're asking yourself, like, how are you eliminating fear in general? You can't eliminate fear. I mean, you could do things that could potentially help with feeling fearful. I mean, if you're scared of losing money, then the best situation to do there would just be to lower your position size, in my opinion, at least. Because whenever I have FOMO, a lot of my typical emotional mistakes, or whenever I'm feeling greedy, it all comes down to position sizing. What I do is I lower my position size, essentially, not to be scared on the amount of money I'm potentially losing, but also not to be overconfident and just over risking in the market. So a lot of the problems I've come across with typically comes down to position size, and I end up lowering my position size and I trade just fine. I'm able to actually even hold my positions for longer. I'm not just so scared of price pulling back all the way on me and me throwing away a completely amazing trade.
Thanks, bro.
Yeah. And then try it out. Let me know how it goes. Let's go, bro.
No, I just said that I agree with that 100%.
Yeah, for sure. Because I mean, like, a lot of the emotions that you're going to face in trading all comes down to position size and how much money you have in your trading account. So if you have $100,000 in your trading account and you're seeing only a few $100s in P&L fluctuations, you're most likely going to be able to maintain your emotional stability a lot better than having $100,000 in your trading account and seeing $30,000, $40,000, $50,000 in swings in your P&L. You're going to be able to trade a lot more logically with only $100 swings,
Yeah, for me, it was actually really hard to drop the position size due to ego.
100%.
Yeah, and it was super hard for me. But when I finally did it, like the change happened like that. Like the next few days, I was just going. My trades were just going really good, and just that one change fixed it all.
Yeah, and you'll find you'll be a lot more consistent that way too. And then it'll be a lot easier for you to scale. Because if you're somebody that's trading funding, but realistically, like, your net worth, let's call it, you have a $200K funded account, but your only net worth is like $50,000. That's all you have in your savings account. And you can't afford to actually put money like that in a trading account. Then it's a lot easier for you to be able to scale when you start off small and you start seeing the position size, your position sizing increase and your P&L fluctuation, because you're taking it super slow versus just kind of like $200K account off the bat, and you're starting to raise tens of thousands of dollars in P&L, which will then cause, or thousands of dollars in P&L, which will then give you that kind of like ego problem, in my opinion, at least, or at least from my experience as well.
Well, when you got funded for the first time, did you have the same emotional like stress and everything as if you were trading your own capital, or no?
No,
like them?
it was a lot more difficult just simply because I could only lose 10% of my account versus on my personal account, although I may have had the same amount of money in that trading account, I was a lot more, there's a lot more, what's it called? There's a lot more leverage that you have with your own capital. I could lose 15% and not lose my entire account versus if I lose 10%, the entire account's gone and then I'm out to trade demo for 2-3 months until I get the funded account again.
Okay.
Oh yeah, I got a question real quick about funded accounts.
Sure.
Let's say you're down like let's say 5% and you make like a payout of like you get like you just make profit like 2K. Do you still get paid?
What do you mean?
Like do they still pay you out or does that like boost your like account equity into like instead of -5%, -3%?
No, you don't get paid. You got to be in profit to get paid.
Okay, got you.
I think he's talking about you talking about if you're in profit and you break the 5% drawdown rule.
No, I'm talking about like if you're in drawdown in general.
Talking about if you draw down 5%, you make $2,000 and you're in drawdown 3%, do you get paid?
Oh nah, hell no, bro, you gotta be in profit.
Yeah, no.
Hey, Raul.
Bro, quick question about gold. If price goes above 7052 area and comes back to retest, so then entering the long, where will you put your stop loss? Do you consider putting it below that double bottom in the 1 hour as too big, or
For buys?
Yeah.
I wouldn't look to buy gold at all unless we see a clean break above 1760, a retest for this area of previous resistance to hold its support, and then I'll look to buy it from there, which I'll then put my stops under this low here.
Okay? Oh, I mean like, okay, you see like price right now, he's respecting this 7052 level, and I thought that if price goes above that little support that is respecting right now, and it comes back and bounce back, I was considering like putting a long right there, and exactly, yeah,
Talking about
perfectly good.
Here to here.
Yeah,
You could do that. I don't. I wouldn't say I would be too comfortable with taking a position like this. You definitely can. If you're going to do that, I would probably wait for another retest of this area just because there's so much time until the London session opens up and establish that this area really is holding as support. And once that actually happens, you could look to take a buy from there to up here, which would be a pretty big move. Honestly, I would probably look to take a buy from here to this area right here. If price breaks above this area, I'd look to go to this area here. I'll put my stops under this low or this
Okay,
low or
perfect.
possibly even this low.
Okay, beautiful, bro. Thanks a lot.
Yeah.
Another question, bro. I know that, ¿verdad? Este próximo viernes vas a hacer la reunión en tu HQ. Do you are going to send the location on the Discord, or
Yeah. I'm gonna send it to everybody that registered.
okay?
Everybody that registered for it, I'm gonna remind everyone in the Discord, just in case. I'm gonna be sending them an email, so you're gonna get an email from my team with the time and the address to go to
Okay,
on Thursday.
okay.
Yeah, if
Got it.
you send me a DM.
Gracias, bro.
Yeah,
Perfect.
Raul,
yeah.
I want your opinion on this trade I just lost on gold. If you go to 30-minute, on that same resistance level you just had that you just deleted, I took a trade right there off after that EMS, after that bearish candle.
This one,
No,
this one.
the one right after it closed right now, that big bullish one,
Okay.
the one before it. Yeah, that one. And I was just wondering your opinion on it, if you think that would be a bad loss or a normal loss.
I mean, bro, look at the time. This is not like
Yeah, but
this is not a time
sometimes
I ever traded gold, you know? And when we talk about these minor levels, you got to remember they're just not the highest probability setups compared to your more major areas, such as these areas up here. So I wouldn't really say like it's a super position.
in my analysis,
See it.
it was a 4-hour level.
4 hours. Are you talking about this area right here?
Yeah.
So if I were to show you kind of like this chart right here, and I kind of mark off, you have 3 areas you're going to look at right? What areas are more significant and why?
1759 and the red zone because
Why?
they're more major. Because
Yeah,
they're more major.
yeah, they're more major. If you just simply go to a daily time frame and you look at it, one, we have actual market structure at these 2 points. We've actually seen price completely shift in trend at these 2 points. And then on top of that, if you look at the level that I just marked off, what do you see on the daily?
Yeah. Okay.
It's nothing. So
Okay.
where would you prioritize a position? You know, it comes back down to like, if you have an 80% chance of winning on a position here, if you have another 80% chance of winning at a position here, but you only have like a 60% chance of winning on a position here, where would you prioritize putting money behind?
The ones with the 80% chance.
Yeah, and that's something you're only going to learn with time. Sometimes
Okay.
just not being in a position is a position. And a lot of times it's always better to not be in a position than being in a position because you save yourself money. Because you also got to think about it this way, like when you take trades that maybe you normally don't take, or you take trades at a little bit more minor levels with bigger risk, like you're just costing yourself money. And that you're just not costing yourself money, you're costing yourself trades. Because essentially when you trade, you're buying yourself more time and you're buying yourself more trades, and you're just paying yourself along the process. So you want to buy yourself as many trades as possible. And by doing that, you're going to keep yourself in the game longer and be able to make way more money in a long period of time versus kind of just like, you know, making some money and then throwing half of that away on a bad position. That's when you start to actually remove those types of decision makings where, you know, it's like, okay, you know, I'm not going to be taking a position, and you start incorporating that type of decision making on really being selective on where you take positions is when you're going to increase your profitability because you're making less mistakes.
Okay. So
I wouldn't necessarily say this was a bad trade, but one, I mean, you took a trade during the Asian session where essentially volume isn't there. We're in the holiday period. On top of that, you know, your two biggest sessions are going to be the London and the New York session. That's when you're going to see the most volume. So that's two things to already take into account. And I mean, although the setup was there, it just simply wasn't the greatest because you may have had a good looking setup off of this 30-minute time frame, but you go to an hour time frame. This is a very big candlestick with a lot of momentum in it. And then you go to a 4-hour time frame. This is a lot of momentum in this current 4-hour or the previous 4-hour candlestick as well. And then you're taking a trade off of a minor level. It would have been a little bit different if maybe this candlestick closed down here and then the next 4-hour candlestick came and you had a big rejection to the upside. Then I would say it would have been a lot better of a position. But this 4-hour candlestick solely just closed at your level, and it closed with a lot of momentum in your level. That's kind of like when you would want to wait to see more confirmation on positions like this, at least.
So when it's like at a level like that, you would want to wait for a 4-hour rejection first?
I wouldn't really wait for the 4-hour rejection first. I would like to see more confirmation on a lower time frame, like on a 15-minute time frame. Wait for another retest, another rejection, then maybe take a position there. But essentially,
Hey, bro, is he in sales or buys? He was looking for.
My bad. Hold on. Give me 1 second. Let me finish answering this question. Essentially, in a situation like this where you have a strong close at your support range, I would definitely like to see a bigger rejection on a higher time frame.
Okay. Appreciate it.
Yeah, like when trading currencies and commodities, I'm a lot more focused on the higher time frames, such as like a 30-minute hour time frame. That's what I consider to be a higher time frame nowadays compared to the indices. I'm trading a lot lower of a time frame, and I'm looking for a lot smaller moves.
Okay.
I have nothing to add to this. That I did a mistake that I do often too. I try to trade off major levels, like Rigoberto mentioned that he saw it as a 4-hour level, and he took a trade on the 30-minute. So I mean, it would have been a decent trade if this probably would have played out on either on the 4-hour or the 1-hour time frame.
Yeah, for sure.
That's something I caught myself doing like a few weeks ago, and then I avoided so many losses. Because I found that mistake.
Yeah, mainly focusing on daily 4 hour and 1 hour entries, but I just saw the 1 hour rejection and a 30 minute engulfing, and I just thought it was pretty good. But I see what you guys are saying though.
Yeah.
Thank you.
To me, it's probably more about the timing. Because if it would have been London session, then there would have been a lot more volume in the market, and you could have potentially won maybe. But the timing is just completely off for me.
Was he looking
Okay.
for buys or sells? Roberto?
What?
Was he looking for buys or sells just now?
He took a
Sales,
sell.
right?
To the sell.
Oh, okay, yeah, okay.
Hey, Raul. Hey, man, I was wondering if you can help me out. I'm a little confused when it comes to like grading my trades and having like a structure system. I don't know if you can kind of give me some advice on your beginning days when you were like building that self-discipline. Like what kind of trades were you taking? What kind of trades were you not? I have the general rule, no more than 2 trades and maybe not risking more than 1% per trade. And, of course, trading in session, but when it comes to the actual trades and qualifying them, I don't know, what advice can you give me?
Honestly, what you have to identify first is the setup, right? After you already have your rules already set up for your risk management, how many trades you can take per day, you have to identify the setups that you're actually taking. So definitely the first thing I would incorporate is an if and then thought process. The same way kind of I showed you guys on the S&P 500 here, right? If price can break under this support range, then I'll wait for a retest and a rejection to look to actually sell. Then you have to wait for that to actually play out. If that kind of makes any sense. But in any situation, I would definitely incorporate an if and then thought process. Like, okay, if price can break under the support range, then I'll wait for a retest or rejection where I'll then sell it. I'll put my stops above the high, and then my next take profit will be this next area of support down here at 39.36. Or if price pulls all the way back up into 4,000, I'll wait for rejection and then look to sell it down into support, which will be down here. But everything has to be determined before you even take the position, where your stops are going, what your entry is going to be, where your take profits going, how much risk you're going to put behind that position. It all has to be planned out to a degree. And then once you see your setup, you make any minor adjustments that you may have to, and then you go from there.
Yeah, I assume I should mainly just stick to buying and selling off daily and weekly levels.
I'm not saying you have to stick to just buying, selling off daily or weekly levels. What I'm saying is you have to have an if and then thought process.
Gotcha. I just see myself losing a lot of trades on the lower time frames, so I'm trying to get better at intraday trading.
Then you have to identify why you're taking those losses. What types of setups are you actually taking? Is it something on your end that you're taking losses, or is it just because of the setups that you're taking and just blatantly wrong every single time?
Gotcha. I'm thinking I don't know, mainly I'm struggling with direction, finding out the general direction on the overall time frames.
Because
yeah. Go ahead, sorry.
I've seen a lot of traders be right on direction, but they still lose money on the position because they just simply can't control themselves. And they either close a position when they're in drawdown before price goes in their favor, or a lot of things along those lines. To be honest, determining direction isn't too difficult, especially like if you're looking like at an intraday time frame. You really only have a few levels where, if price breaks this level, then it's going to come up into the next level. If price breaks this level, then it'll go down into the next level. That's kind of how you want to incorporate it. Again, it really comes down to, I wouldn't even know what analogy to put behind it, but it just comes down to just basic understanding of supply and demand, support and resistance, and then probabilities. If price breaks this area, what's the probability that it'll come down into the next support range down here?
All right. Thank you, man. Appreciate it.
So, Raul, I
gotta
wait. Let me kind of finish up real quick. So if you're trading an intraday level, I would just kind of continue to map out where your main intraday, what was I going to say? I don't want to say pivots. Where your main intraday levels actually are, mark them off within your relevant price action, and then literally just trade from level to level. That alone will definitely help you out a lot in determining direction.
Thank you, man.
Yeah. My bad. Who else had a question?
Yeah, I got a question.
Yeah.
Yeah. I struggle a little bit cutting my trades when they start to pull back. Can you give me any tips on that?
What do you mean cutting your trades when they start to pull back?
For example, I'm in a trade right now on GJ from 167.150, and it's starting to pull back, and I don't know if I'm already at break even. And what do you suggest, that wait for break even to get hit, or just let it play out?
Well, let's put this into perspective. So you're in a position from roughly up here, let's call it, right? A sell, I'm going to assume.
Yeah.
And your stops, I'm going to assume, are around here.
Yeah, but I'm already at break even.
And price came all the way down to here. And you're thinking about potentially throwing away all of this profit to make more.
Well,
because if you break even, you make no money. While you're up, while you were up almost 3 times your risk, almost maybe.
Yeah.
And you're thinking about going to break even, letting the trade go and hit your break even. Why?
So you suggest to keep your stops and take profits, get hit?
No, but I want to understand your mindset as to why you would think that in this situation here, you would allow price to come all the way back to you, completely throw that trade away and get out at break even.
Okay, so I'm targeting 165.400, and I see that on the 1 hour it had a double bottom, and it's like pulling back now. So I'm not sure if I can close that trade or not.
I think taking partials is the answer, like 20% at 3 to 1. That's what I do, and it helps me a lot.
Or you put your stop above the wick.
Bro, I'm closing that trade. Do y'all not see how far that joint went down? I'm taking my 1 to 3, and I will wait on the next move.
Here's the thing. So when you look at the position that you took, where essentially you went short here, your stops were up here, and your targets are down here, right? Price came all the way down, formed a new low, pulled back, and then continued to form a new low after that. In a situation like this, right, once price gave me this engulfing candlestick, my stop loss is now going to be above this high. Because if price breaks this high, it can continue to go up. But now you continue to hold the position, and price has just made a new high where there's a previous structure point. So price could potentially go down from here, but you've already given back to the markets all of this potential profit. Now, again, you got to think in probabilities, because although your targets are down here, it doesn't mean that price is going to hit it. And it doesn't mean that, and if price does hit it, it doesn't mean that it's going to hit it right away. You're looking at an hour time frame where you're going to see pullbacks and you're going to see different swings in your P&L. Your goal, again, as a trader, is to build as much cash flow as you possibly can. From a cash flow perspective, how would you feel if price were to completely break you even after being up all of this?
Well, like a clown.
So what can you do in a situation, not just in this position, but in future positions for you to build that cash flow?
What was that again? Sorry.
What can you possibly do? What can you possibly incorporate in your trading for you to build that cash flow? Because I understand that letting your winners run for as long as possible is great. And I mean, when you put it on paper, it sounds great, but realistically, what's more important than letting your winners run for as long as possible is to build cash flow. Then once you have that cash flow in your trading account and you're up a certain amount in your trading account, sure, you could be a little bit more you can have a little bit more wiggle room. But regardless of the fact, you still need to start off by building that cash flow. And in a situation like this, right, price has already given you a reason to get out of the position, not just recently, but over here. Why? Because price came down, formed a new low, came up, formed a high, then came down, formed a low, double bottom, broke above the double bottom.
Okay, so trailing stops is kind of the answer.
100%. It's not just kind of the answer, it is the answer. Right?
Okay. Thank you very much.
It's up to you. if you want to close now, it's your trade, your money, your risk. God bless, right? But at the same time, you got to think about it. Are you going to trail your stops? If you're willing to trail your stops, I can get it. Maybe you're risking $1,000 to make $7,000, right? I can understand that. I definitely wouldn't agree with you putting money or putting your stops just at break even, just simply because if price breaks this high now, it's definitely going to come up and most likely hit your stops for break even. So in a situation like this, you have two options, and this is how I would look at it. If price breaks above these highs, you get out, you take whatever little profit that you made, and essentially you're killing your arm multiple by doing that. And this is also why I say the longer you hold the position, the more open or the more risk you're taking on, because price could pull back like you on this and pull back even further and then continue to go down, when essentially you could have caught a move from here to here and then gotten back in again here and looked to catch a move from here to over here, versus you taking on all the risk of holding and through this entire swing and doing this. Now, I'm not saying price is going to pull all the way back on you, probably go to break even and then continue to go in your favor. Price could just drop right now and it could drop past your targets and you made a bunch of money. God bless, right? But you got to look at it from multiple different perspectives. You got to look at the risks and you got to look at the rewards, and you got to be comfortable on taking those risks. If I was in your situation here at this point in time, it's either I'm going to close the position now and just take my money, or I'm going to trail my stops above this high, because if price comes to these highs and breaks above these highs, it's most likely to continue to go up and continue to make new highs. And I don't want to be in the position anymore. And you know what? I risked X amount of dollars here to potentially make X amount of dollars there. I'm okay with that risk. I know what I'm doing here in this situation. You know, God bless.
Thank you very much for the explanation, bro.
I took the same trade. How I managed it was when it made the lower low and then it made the double bottom, I took 2/3 out and just kept 1/3 running just in case. So I already have money in my pocket, basically.
Yeah, but you secure cash flow.
Yeah.
You already did.
Yeah.
That's the difference between your position and his position. He hasn't secured anything, at least from what you've told me. It may be a little bit of a different story if he was like, yeah, you know what, Raul, price gave me a reason to get out of the position, but you know what? I secured 50% of my position already. I built that cash flow for my trading account today. My stops are at break even. If it decides to go to 155, 500, great. I'm going to make a lot more money than I anticipated. If price hits my stop loss at break even, I only made 50% of what I actually anticipated on making, or what I could have potentially made. And God bless. I'm going to move on to the next trading day, you know?
Gotcha. Was just giving him an idea, since he likes holding position as what he's saying.
Definitely, though, I would see it a lot more beneficial for you to secure profit if you're going to be holding positions for big swings like that, because you're talking about a price movement from 167 down to 165. That's a huge move. I would definitely secure profits if you're holding positions like that. Because me nowadays, I mean, trading US 30, the S&P 500, the NASDAQ, doesn't matter, you know, what platform, I'm only holding for, 3 hours, if that, you know?
What I was about to ask is, like, do these markets change your perspective? I was going to ask
100%
on holding compared to scalping, because, bro, honestly, like, scalping recently, like, has been benefiting me a lot, so.
You know, everyone's going to have a different ideology on what scalping versus day trading actually is. Personally, I see the longer you hold the position, the more open to risk you are, especially if you're somebody that's swing trading, you're trading a daily 4-hour time frame. You really need to know what you're doing in terms of like economics and what's going on with the fundamentals of that specific currency pair or whatever asset class that you're actually trading. Because if you're holding positions for days, you think like just technical analysis alone is going to push price in your favor. Like, you really have to know what you're doing in terms of like understanding the fundamentals behind what you're actually trading and why. In a situation where you're swing trading, you need to have a fundamental confirmation and you need to have a technical confirmation as well. Combine the both of them, and that's what's going to give you your edge in the market in a swing trading position. In a day trading or scalping position, you can solely rely off of technicals and be profitable in the long term.
Yeah, I feel like exactly what you said with how it came down, it formed a resistance, came down, it tried to break. That would have been my point too, as soon as it broke the high to get out. But like you said, like that, it comes with time and experience to know to like, okay, boom, once you see the reversal structure to get out, and then you know that that's a major level. So that when it comes back to that major level, then you know what I'm saying? You maneuver
Yeah,
again.
like over the years of me trading, the understanding that I came to is just I'm not just looking for a move. I'm looking to secure cash flow for my trading account. I'm looking to make money. And I'm not going to be doing that by literally looking for a bar graph, because this is literally a bar graph, to go from this point to this point and hold it every single time. Because a lot of the times it could go to this point, and then completely go back and kill the trade. I want to secure cash flow. You know,
Right. Just like how you said with that wick, I was gonna say like with that news event, how it got wicked out, because I was actually in that position. But exactly like you said, price pushed up during London. I seen it give me a reversal like on a smaller time frame. I exited and the shit came all the way back down. And during New York, it was choppy. Bro, stopped and then boom, went to my target.
Yep.
It was like a 1-6, bro. I entered at like 1739 with a target of like 1756. So it like wigged me out. And then I was gonna ask like, oh, what could I have done to avoid that? But then as I looked at it, I'm like, I could have just entered after the news at like 10:30, but it's not my session anyway. You know, I was just.
I mean, it really just comes down to R multiple at the end of the day. You know, you really want to look at what your planned R multiple is per position and what your actual R multiple is, and see why your planned R multiple really doesn't come out as close to as your actual R multiple. Because if your planned risk to reward ratio per day per position is 4-to-1 and you're at a 1-to-1, you got to see what you're doing wrong. And if a lot of those positions are hitting that 4-to-1 planned risk to reward, but your actual is only coming out to a 1-to-1, then obviously you're closing your trades way too early. But if your planned risk to reward ratio is at 3-to-1 and you're at a 2.5, then you're doing pretty great.
Hey, Errol.
Yeah.
Hey, brother. A little bit, kind of like a psychology question. I know everyone's psychology is different, but just like from your own experience, at which point were you like, after seeing consistent profits, were you like, all right, I'm confident in my ability, and you know that fear of uncertainty goes away? Does that fear ever go away, or you still have a little bit even to this day?
You know, I'm going to be honest with you, when I first started trading, like what I went through was basically something like this, where I started trading, I felt like I was a shit, I knew everything, and that slowly started to diminish to where I was just super insecure and I didn't want to even take a position, but I literally forced myself to continue to trade and go through those emotions. And then slowly over time, that started to build back up again. And it really only came with time and me going through this experience of, you know, I don't know shit, and admitting I don't know shit and continuing to learn, to then really restructuring myself and analyzing what I was doing. And then my confidence and everything slowly started to build back up. In terms of like, I guess what was your question?
The fear of uncertainty, knowing if you're gonna do well or not this month.
Well, I don't ever really know. I can only just go based off of the probabilities and just go based off of what my statistics were. Because me personally, I thought I was going to have a fire month this month in November, but I really ultimately didn't do that great. I mean, let me open up my trade key, but
Real quick, what was your worst month? Like percentage wise?
probably July.
This past July?
Are you talking about this year or in general?
No, just in general, like percentage wise in a month.
I want to say probably July. I started off July great, but then I ended up in a loss.
Is that before you started trading indices? That's
Yeah.
around the time.
It was right here. This month, I thought I was going to have a great month just because my ego, my confidence was through the roof. You know, I had recently just had $1 million month, and I basically allowed my ego to come back. And on my first trade of the month, I'm down 23K in 3 positions when I don't want to say 3 positions, 3 trades when I never try and take more than that on a single day. But it's not like I allowed that to come back against me. I came back from that very, very quickly. I mean, the next day I made that loss back plus more. You can kind of see like my R multiple here as well. I mean, I always try and aim for 2-3 times my risk. If I could do that, then I'll be satisfied. But shortly after, I had a big day, and then after my big day, I had small days, which ultimately it also depends on what I was risking, because if I was risking 10 grand to make 15, 16, it's acceptable, but it's not optimal. But then if we look at my actual losing day, because this was a mistake. I took way too big of a position size and I held for way too long, and I ended up losing more. I always try and lose 12, 13K on a specific position. That's kind of like my average risk, which is what you could kind of see over here. So then this would be essentially a 1-to-1 position. This will be like a 2.3 position, and so on and so forth. So, I mean, my average position or my average trade size was a little bit bigger than a 1-to-1 on this specific month, being November, just simply because on average I was risking 12, 13,000. I mean, my biggest position was 7 times my risk, 8 times my risk, but that's not every single day. I would definitely consider this to be a home run trade, because on this position I was risking only like 16,000. I made 100 grand. But then you also got to keep in mind, on top of that, I lost 20 grand here, made 20 grand here, and I was risking 16 grand here. So imagine if I would have lost this position and not made 100 grand, I would have completely thrown away my profits from the previous trade and then still been in a loss, So for me personally, I wouldn't say this was like my greatest trading month. Even though I ended in green, I made mistakes. Yeah, sure. But that's part of the game. I just have to identify these mistakes and not make them again in the future.
Didn't you lower your account size too?
Say it again?
Didn't you lower your account size? Like the amount of money you put in that new account?
No, my size is the same.
Okay.
I mean,
Bro,
I withdraw, obviously. I would have way more money in this account if I didn't withdraw 105K by my fiance a year. But,
that's horrible. Horrible problem to have. Nah, bro. Yo, bro, quick question.
I hate when that shit happens, man.
Hey, bro, it's so annoying, bro. I blacked out one day and I ended up with a new rolls. It's a sickness, bro.
It sucks, man. You might as well just like jump off the bridge,
Yeah, bro. I mean, at this point, what's going on?
A question about the like this more like with US 30 and